Welcome back to the Daily Journal. So I'll be reviewing my trade on NASDAQ, well in fact YM, its correlated pair from the London session. So going into Friday, my drawn liquidity was the same for the week, which was the previous week, relative equal highs, basically equal highs, as well as the previous day relative equal high to the previous week. What validated that drawn liquidity was the following. The fact that this sell-off still respected the new week opening gap by not closing a body candle below that. In addition to the fact that the daily order block was respected, we had a really nice reaction of that. And lastly, for the daily chart, this low was in fact swept. So the previous day was swept with its correlated pair, that being YM. And since NASDAQ had not swept the low out of the two, this is the stronger pair to trade, at least on this day. So going down to the 4-hour charts, I need confirmation, one more confirmation going into Friday, that these highs were valid to target. So just to clean up the chart a little bit. And that was the inversion of this 4-hour gap, right? This is a sell side imbalance. And so the reason why this is one of my favorite high time frame models is the fact that when price sells off like this, the psychology of the market going into the next day is bearish, right? Everyone expects to sort of lower with a move like that. But it's so classic. When you get close to the drawn liquidity, such as we have here, look at this, right? All this low resistance liquidity, which is just really, swing failures basically, as well as really clean highs like that. And you get a huge sell-off right before, that is your indication to look to get on side, not the opposite. I mean, just look at anywhere on those charts. When you had these, look at that, for example, right? I mean, these were awesome highs. So, but nonetheless, right, you still had buy side liquidity resting above that. And you get that huge sort of one-sided delivery. That's important, right? And it just continues to go up. The bias for the week was a little different. Yeah, obviously we had this sell-off, and the daily chart will tell you all about that. But that's for another video. So. Right, so going into the day, I had my daily bias confirmed with these 4-hour inversion. So I was looking to get on side and I needed some form of retracement. I was eyeing out the new day opening gap for some form of retracement in London to get on side, then trade to these highs. But we just kept trading through all these highs over here. So there's Monday, there's Tuesday. And going into the London Open, this 1-hour candle gave me a trade idea. So you can see how from the 4-hour open at 2 a.m., we had just traded to the upside. So potentially this wick could be forming for the 4-hour since we traded into buy side liquidity as a one-directional move. Right? So we've had 4 candles on the 1-hour expanding. So we can expect a new phase of price. And because we bullish trading towards this high, and this is still intact, I'd expect a retracement or consolidation. But given that we've got this wick, I can expect some form of a retracement. Now, looking at the correlated pair, that being YM, look at the difference in these two charts. Right, focus on this high over here, which is Tuesday's high. This on NASDAQ is this high over here. So the question is, has this taken it out? Well, on its own chart, no, but with its correlated pair, yes. So this is clearly the weaker asset at this point. So we shift our focus to this. This is now a sweep of the previous day high via SMT. So we drop down to the 5-minute chart. And this is a new model that have added to my arsenal, right? So is that typically I trade reversals and continuation models. And for that reason, the reason why I like them, right, is that I get my second sweep of liquidity. But on a retracement like this, you don't want that second sweep of liquidity. You want relative highs to remain intact. So you got a clear target to trade to for the continuation of the high time frame trend. So going into the opening of the 3-hour candle on the 1 hour, I was looking for this continuation. This was a reversal candle, which was confirmed by sweeping the previous day high. And this, of course, is SMT. So I was looking for a change in the state of delivery, which would come from a candle body close below this level. And it's also around that opening price of that previous candle, which becomes irrelevant once we open this new one. So I'm looking for this wick to be respected at least 50%. And you can see there's a small wick that forms. That's what we want to see for expansion. But I need to see a body candle close below, which we've now got. So this is where I got on side on this trade. And this is trading the reversal. Your stop loss can go at this high. Reason being is that that is now a protected high. Simply because this close over here confirms this as an order block. This is now a protected high, and I can get on side. So the targets, one of my favorite tools is the standard deviation. And if this is a tool that is new to you, I highly recommend going and doing some backtesting with this. This is by far one of the most powerful yet simple tools that you can use in trading. In fact, it is so powerful that you can predict, not rather predict, but you can project where price will go when making all-time highs, which is an exceptionally powerful tool because there's no data to the left. So how do you know where price is going to, stop or retrace or reverse? And if you go look at NASDAQ, go look at when it makes all-time highs. Go look at the sweep of liquidity that led to making all-time highs. That's where you use your standard deviation, is always at the manipulation, swinging highs and lows, or vice versa. And that will project where price will go to, either the 2 to 2.5 or the full extension, 3.5 to 4, right? So going back to this trade, the targets I had for my drawn liquidity was first these relative equal lows, right? This is low resistance liquidity. But the fact that we had lined up exactly with the 2 to 2.5 or the 2, that was my first target. My second target was these relative equal lows right here, and this over here landed within that. So these are my two targets. There's also a new day opening gap, which was my initial target on NASDAQ, right? But since this is the weaker pair, I was looking for those two to play out. Now here's the thing. There was a second sweep of liquidity, which came from here. Now if you look at NASDAQ did in fact take out this high. So there was your second SMT. So if you required more confirmation, this is where it would have come from. This would have been trading the continuation from this reversal. Something that I've been practicing is trading the continuations, typically as a reversal trader. And I'm not just saying, not just a high time frame reversal. That's a high time frame model in and of itself, but a low time frame confirmation model, the reversal, that is something I was a lot more comfortable with trading. Continuation is something that I've had to learn. And again, credit to T-Trades teaching me protected highs and lows, because once a candle body closes below this becomes your projected high. And then you can trade the continuation from this point. Right? So you would have got on at the open, this would have been and you can target your 2R, right? All that low down there. And typically these are your kind of low resistance type of runs. And good thing I hadn't targeted this, right? You should have, if anything, whenever you see wicks like this, I highly recommend just using the bodies. Because if you look at this probably got, probably reacted at the 0.5. Yeah, so there it is. So just to clean it up, this is how you grade your wicks. Because remember, wicks are just inefficiencies. So just like you can grade a Fibonacci gap, you can also grade wicks, and look at that. Beautiful. So there was the trade, it played out, there was the execution, and as we were saying, the trade idea was in the 1 hour, we were looking for that continuation from this reversal, which is what we got. I was looking to get on side and to trade to the previous week highs with NASDAQ, which is my next trade journal video, so go check that out. if you've stuck around for this long, thanks for watching. Hope you learned something. And you know the story. Like, subscribe. See you guys in the next one. Cheers.